Good morning, students. And the topics which are to be covered for the session are trading account, profit and loss account, balance sheet, and adjustment. Basically, today we will solve a numerical question so that you have more practice of final account. As you are aware that why we are preparing the final account or what is the need of final account or financial statement. So every organization at the end of the year prepare its final account or financial statement. So trading account is prepared to find out to calculate the gross profit. Profit and loss account is prepared to find out or to calculate the net profit, which is transferred to capital account, which is added to capital account because the capital is increased by earning the profit within business. And balance sheet is prepared with assets and liabilities in order to disclose the financial position of a business enterprise. So there is a particular need of the financial statement because on the basis of information taken from financial statement, the stakeholders may take the informed decision. In order to give the accuracy your accounts, your financial books, you need to take care when you are entering, when you are preparing any book of accounting. So we have to follow the rules of bookkeeping, accounting in order to ensure that every information is placed in the books of accounts in a proper manner. And final accounts as prepared at the end of year or after the financial year on 31st March, the financial statements are prepared and with the help of trial balance as you extracted the balances from ledger and you placed in the trial balance, you prepared the trial balance. So with the help of this trial balance the final accounts are prepared. So basically this is the small revision so that you recall that why we are preparing the financial statement, what is the final account, what comprises the final account, and exactly what is the purpose, what is the need of preparation of final account. So whenever it comes to measure the financial performance of any business, if you want to compare the financial position, financial performance of any business with other competitors, so that time you need the financial statement. And when it comes to disclose the financial position of your business, so balance sheet is to be prepared. It is also the part of final account or financial statement. And it is noteworthy that at the time of raising the loan from financial institution, there is a requirement of your balance sheet, there is a requirement of your financial statement. So every year in the business organization, you have to prepare the final account. The purpose of trading account, as I told you, is gross profit calculation so that you want to know, basically you want to know that exactly what is the profit after deducting the direct expenses from the revenue. So all the direct expenses are shown or are debited in the trading account, and the revenue in the form of sales you have to show in the credit side, that is the income side in the trading account. And it is very important to keep in your mind that when you prepare the final account, the direct expenses are shown in the trading account and indirect expenses are placed in profit and loss account. Direct expenses means directly related to the production of your product. For example, if you are buying the raw material, if you are paying the wages to the workers, or some manufacturing expenses are occurred. So these are the examples of your direct expenses which are related to your production, operation, right? So those expenses are to be treated direct expenses and are to be shown in the trading account debit side. And in the P&L account, in short, we are calling it P&L account, that is the profit and loss account. So you have to show all the expenses which are indirect you have to show in the debit side of P&L account. And all the incomes, like if you receive the interest, if you receive the commission, any rent, discount, these would be shown in the credit side of the P&L account. Balance sheet, yes, where you have to show, you have to place all the liabilities and assets. So balance sheet would be prepared over there. And the trading accounts profit, it means the gross profit, which is calculated by preparing the trading account, would be transferred to profit and loss account. And net profit, which you get after preparation of the P&L account, would be transferred to capital account in the balance sheet. In the balance sheet, the left side is the liability and right side is called the asset side. Asset side is the debit side and liability side is treated as a credit side. So this is the summary of final account. This is the purpose of final account, and it is most important to keep in mind that when you are preparing the final account, every head of account should be treated, should be placed in a proper place, whether it is related to trading account or it is related to profit and loss account, or it should be shown in the balance sheet. You have to take care of it. And few information, additional informations are given you in the question below the trial balance, that is called the adjustments. So directly you have to adjust those informations, those transactions in the final accounts, right? So today we are covering again the numerical question of final account, and for that purpose we should proceed with the Excel sheet where we have the question. So this is the numerical question. We read it from the following trial balance of Mr. X as on 31st March 2024. Prepare the final accounts after considering the necessary adjustment. Right? So trial balance as on 31st March 2024 is given to you. When you are going to prepare the final account, before that you should go through, right, the trial balance, so that you have the proper idea that exactly what particular account should be placed and what is the place of that head or that account in the trading account, profit and loss account, and balance sheet. As I told you earlier, that in the trading, all the expenses that is related to direct manufacturing or production, or those expenses which are direct expenses, are shown in the trading account debit side. And if sales is given to you, that is the revenue, it should be shown in the credit side. So first of all, a particular structure of trading account, profit and loss account, and balance sheet, you should remember, you should keep in mind, and accordingly you have to place every item from trial balance to your final account. Okay, let's start with the very first item, that is the capital account. So first we verbally read that what is the account, what is the particular head is given you in the trial balance, and after reading all the heads and confirming that what is the particular place where it should be located, and the adjustment would be considered also, and the items would be marked over there with the adjustment, right? So there is a particular green color, it means there is an adjustment, we have to take care of it because it is to be added or subtracted. So there would be a particular impact of any information, any adjustment on a particular head of account, so we have to adjust it, right? So the very first account or the item, we can call the item in the trial balance, that is the capital account, rupees 1 lakh. So it is the liability, it is the obligation from the perspective of the business organization, right? Because you can say that this is the owner's capital, so it is an asset, but as per the accounting, as per the bookkeeping or the principle of accounting, you should treat the capital account as a liability from the perspective of the business organization, because the organization has this obligation to repay this particular fund to the owners. of the business, right? And drawing account, that is given 2600. So it is the personal expenses. You are withdrawing any fund from business organization for your personal use. It means the capital is reduced by that particular amount. So drawing would be reduced. Drawing would be subtracted from the capital account in the balance sheet liability side. The next item, that is plant and machinery. So plant and machinery, 50,000 is given to you. 50,000. It is an asset. Yes, it is very, very important to differentiate between revenue expenditure and capital expenditure. So here I would like to express, I would like to make you learn about this particular concept, that is revenue expenditure and capital expenditure also, so that you can differentiate between both. So for operating the business, no doubt, for generating the revenue, for the sales, you make some expenses, you make some payment. So that is the revenue expenses, because for generating the revenue, you are making some expenses. But when you purchase some assets, it means a huge amount is invested, and for a longer time, for a longer period, your money is involved in that particular asset, and that is the tangible asset. Like this example, that is the plant and machinery. So capital expenditure refers to those expenses, those assets which you are buying for a longer period, and by use that you operate your business. So directly and indirectly, if we want to express it, the plant and machinery or furniture and building, like other assets, you have to show in the asset side in the form of the capital expenditure, right? Because this is not the revenue expenses. So plant and machinery would be shown in the asset side, rupees 50,000, right? Or you can say that this particular asset's value or the cost of this asset would be spread over the life, and in this manner we have to reduce this particular asset by charging the depreciation. So if the percentage of depreciation is given to you in the question, or depreciation adjustment is given to you in the question, you have to charge the depreciation on a particular asset by the given percentage. And next item is the opening stock. That is the part of the trading account. It is to be shown in debit side. Purchases account, again this is debit side of trading account, it would be shown. It is direct related to direct purchase production, or it is direct expenses related to trading account. Sales, this is the revenue, and you have to show it in the credit side of trading account. And sales return, sometimes written in words, that is the written in word. It means you are selling the goods, but few customers are returning the goods, so this is to be subtracted from sales. So 5,000 would be subtracted from 75,000. And purchase return, 2,000 is given to you in the question. Purchase return would be subtracted from purchase, right? Because you are returning the goods to your supplier. Sundry debtors, this is an asset. It means you have to receive the payment from your customers. Maybe you had sold the goods on credit, so in the form of debtors, it is to be mentioned in the balance sheet in asset side. And sundry creditors, that is given 80,000, so it is the liability of the business organization. It is to be shown in the liability side. Carriage inward, again, if you are buying some material, some goods, that is purchase, and you are making some payment towards the expenses of carriage, so this is the direct expenses related to your purchase, your production, your manufacturing, so it would be shown in the debit side of trading account. Wages, you are paying your workers who are involved in manufacturing, in production, in factory. So that is the direct expenses would be shown in the debit side of the trading account. And salaries, indirect expenses, because the employees would get the salary remuneration. It is the part of the P&L account debit side. Yes, all the expenses, whether related to trading account, whether related to P&L account, would be shown in the debit side. And trading account and P&L account both have the credit side, right side, that is the credit side, it means the income side. Okay. Wages, salaries, and then office rent. Yes, it is to mention here. Sometimes the expenses are given in the name of the factory and office. So if office is prefixed of any expenses name, that time this is related to profit and loss account. And if any particular item is given to you with the name of factory, so that is related to your trading account. So office rent would be a part of P&L account. Stationery, again, the part of P&L account. Interest, yes, maybe you have to give the interest, you have to make the payment for the interest, or you have received the interest. So in the credit side, as you have to observe whether it is given in the debit side of trial balance or in the credit side. So as per this particular question, as you observe that interest amount is given in the credit side of trial balance, so it is assumed this is the income. So it would be shown in the credit side of P&L account. And discount allowed, no doubt, you are giving the discount, you are providing the discount, it is the loss for the business, and all the losses and incomes would be shown in the P&L account. So it is the part of P&L account debit side. And furniture, it is an assets, so it is to be shown in the balance sheet asset side. And if the depreciation is given to you, you have to charge, you have to reduce the furniture value by that particular given percentage of depreciation. And bad debts, it is the loss again for the business. It means the debtors are not making the payment as per the requirement, as per the accounts balance. So bad debts is the loss for the business. It is to be shown in the P&L debit side. Commission may be received or paid. So here you observe that this is the debit amount. So you have paid the commission. It is an expense, would be a part of the P&L account debit side. Buildings, again, this is an asset. So it is to be shown in the asset side of balance sheet. Bills payable, it means you have to make the payment in future. So this is the liability. Cash in hand, cash at bank, both are the assets, so are to be shown in the asset side. And bills receivable, it means few bills you have and for which you will have the payment in future. So this is again the asset, so it is to be shown in the asset side. Okay. And after that, we should read the particular adjustment as given you in the question, right? One by one we have to read it so that we can calculate, we can place these adjustments, we can adjust these information in the final account. So very first thing is that every adjustment will impact two side, debit side and credit side of the account. It means it would be placed in two places, right? And generally the particular transaction is related to trading and P&L account, and the second time or second place is the balance sheet. It means either in trading or P&L you have to place it, and other place is balance sheet. Okay. For example, closing stock as an additional information is given to you. So closing stock would be shown in the trading account credit side, and because you credited this particular amount 20,000 in credit side of trading account, it should be shown in the debit side. So what is the debit side of balance sheet? That is an asset. So in the assets, this closing stock again would be shown. Okay. So this is the particular way to prepare the final account. And let's start with the solution of this question practically, right? So one by one, we have to feed the items. The very first item is capital account. Okay. before that, once again I tell you that the green color marked items are having some adjustment. Suppose bad debt provision 10% is given to you, so it is to be calculated on debtors. So bad debts and debtors, you can observe that this one green color and bad debts, this one green color, it means these both items are having the adjustment in the question. Office rent, so you find the office rent. Okay, where is the office rent? This one. So again this is colored. So you have to give the marks so that when you are preparing the final accounts, you don't forget to adjust any adjustment, any information given to you in the question. Depreciation of plant and machinery and furniture. Depreciation plant and machinery, right? So plant and machinery is marked. And where is the furniture? Yes, furniture, this one. This is also marked, right? And accrued interest. So accrued interest, you find interest. Yes. So where is the interest? This one. Okay. So it is the income side, and interest is accrued in the question in the additional information. So you have to take care of it also, right? Now let's start with the numerical solution. The very first item is capital account rupees 1 lakh. So we have to write rupees 1 lakh capital, right? Rupees 1 lakh. Second item is drawing account, that is 2600. As I told you, it is to be subtracted from capital account, but you have to leave 2 3 lines because there would be loss or profit, then total, then less drawings, right? Drawings account is 2600. It is to be subtracted from the capital account. And plant and machinery, okay, this is an asset. What is the amount? Plant and machinery rupees 50,000. So it should be shown in the inner column because there is an adjustment like depreciation. So after making the calculation, after subtracting the amount of depreciation, we have to get the figure, and that would be shown in the outer column. Okay. Opening stock 10,000, that is the part of the trading account as I told you. So you have to write here to opening stock, that is rupees 10,000. And purchases is given to you. We don't need to write in the inner column because there is no any adjustment. Okay, we just write it, put it outer column. And purchases, to purchases, because there is a purchase return, so you should write in the inner column rupees 35,000, right? And sales, next item is sales. So by sales, that is 75,000. Now you have to subtract the sales return and purchase return respectively from sales and purchase. So sales return is rupees 5,000. So there is a method that you can calculate simultaneously this particular amount as you are solving the question, or otherwise you have to make all the calculation together after filling all the items from the capital account in the format of trading P&L and balance sheet. So we leave it, or otherwise you can solve it this time. Okay, but you have to keep remember that you don't forget, you have to ensure that every calculation is made, because sometimes what happens that without calculating a particular figure is not it is not observed, and the few items which are having the adjustment, and you just written in the inner column and it is not displayed in the outer column, and you are not involving those items in calculation of finding the gross profit or net profit. So it is very, very important, right? So the second method you can follow that, right, time to time you are writing after adjusting the particular thing, like 70,000. So this is the sales return. And as you see, next item is the purchase return 2000. So it is to be subtracted from purchases, that is less return. Purchase return is 2000. So the amount is 33,000. Okay. And the next item is sundry debtors. Okay. Assets. And the amount is 80,000. And creditors are also for rupees 80,000. So creditors in the liability side. Okay, creditors rupees 80,000. Then carriage inward rupees 500. So it is the part of trading account, right? And the amount is given to you 500. Wages 10,000. Okay. In the trading account, it would be shown in the debit side as the direct expenses. And salaries rupees 25,000, right? Salaries is rupees 25,000. Office rent, yes, it is another expenses of P&L account too. And because it is marked with the green color, so it is to be shown in the inner column. There is a particular adjustment, right? So office rent is rupees 3,000. Stationery, so leaving one single line, we have to write another expenses, rupees 500. And interest, next item is interest, that is the credit, that is the income. So it is to be shown in the credit side of P&L account. This is the received interest. Okay, that is rupees 600. And discount allowed, this is the loss for the business, because you are providing the discount to your customers, right? To discount, and if it would have been uh, given to you as a discount received, so it should be shown in the credit side, but right now it is discount allowed, so in the form of the loss for the business organization, you have to treat as a loss and should be shown in the debit side of P&L account. So discount allowed rupees 300. And furniture is given to you 60,000, so you have to write here furniture. Okay, debtor was having the adjustment, so we should write in the inner column this 80,000. Okay, bad debts provision is given to you. Okay, and now furniture. Furniture is given to you rupees 60,000, and there is also debt, right? So 60,000. Bad debts. This is the part of P&L account. To bad debts, because the adjustment is given to you related this item. So 4,000 in the inner column you have to write. Okay, and commission. Okay, then commission again in the debit side to commission, that is rupees 300. Building 8,000. Right, buildings 800. Bills payable, it is the liability, so rupees 45,000. Cash in hand, okay, asset, that is 1,800. Cash at bank, again this is the part of asset. Cash at bank rupees 600. And bills receivable, again assets, that is rupees 6,000. So I think we have filled all the items. So this is again a mark, or that particular aspect of preparation of final account, that you should ensure whether all the items are placed in the final account from trial balance, or if any item is left to be placed. So you have to go thoroughly to your trial balance and try to find that, or try to ensure that every head of the account has been placed in the final account, right? And after that we should read the particular adjustment as given in the question and solve it, right? So very first thing is that closing stock is given to you 20,000, so it is the part of the trading and assets, right? Because I told you earlier that the particular adjustment will take place minimum two places, right? So by closing stock, how much amount is given you? That is 20,000, right? 20,000. And in the asset side it is to be shown closing stock. Bad debts provision, that is 10%, right? So less bad debts provision, that is 10%, right? So 80,000 you have to solve on this particular figure, 10,000. So 10% of 80,000 is rupees 8,000, and the balance would be written in the outer column. And this bad debts provision should be here, and it would be added, right? Add new provision, that is what the new provision for bad debts. rupees 8,000. So total amount rupees 12,000 would be written over there in the outer column. Clear? And next item is office rent outstanding. It means the office rent which is due, you have not paid till this time. So it is assumed that it would be payable in the future, right? So this is the liability. It is the part of the financial year. So because it is very very important to keep in mind that the items or the particular expenses, incomes which are to be shown in the trading P&L, right? So for the financial year, it should be treated and it should be written over there. But if any item, any expenses, any income is not related to the financial year for which you are preparing this final account, those items should not be treated for the financial year, this current year, and should be treated as an assets or liability, and it should be shown in the balance sheet, right? So office rent outstanding means that this is the particular amount due. It is to be paid by the organization, but it is related to the financial year, so it is the part of expenses and it is to be added in the particular given expenses, but this part which has not been paid, so that would be part of the liability side. Okay, so 400 rupees, that is the office rent. So we just approach to office rent and add this item, add outstanding rent. Okay, and what is the particular figure of this adjustment? That is office rent outstanding 400. Okay, now the figure is total 3400 office rent, and this outstanding office rent should be written here. Sometimes the students forget to mention the second place, right? In the second place, so it is very important, otherwise your balance sheet will not match. Outstanding rent, that is rupees 400, and depreciation on plant and machinery. Okay, what is the particular figure of depreciation? We have to calculate, we have to charge the depreciation on plant and machinery, that is by 10%. So less depreciation, and I told you earlier that depreciation is a loss, and that is the loss due to the tear and wear of the particular assets, or by using the plant and machinery. For example, you might lose some value, or in the future, maybe if you want to resell this particular asset, what would be the particular value for reselling this, so you have to charge the depreciation in your account periodically, right? Or every year. Okay, so a particular percentage is given to you, that is the 10% on plant and machinery and 20% on furniture. So 10% depreciation is to be charged against this plant and machinery value 50,000. So 10% would be 5,000. Okay, and 45,000 you have to write in the outer column. Right, and the same depreciation should be shown in the P&L account. 2 depreciation of furniture. 20%, that is 12,000. And in the outer column you have to write, after subtracting this particular amount that is 12,000 from 60,000, 48,000, right? And this depreciation should be shown in the P&L debit side because it is the loss. And accrued interest, that is rupees 1,000. So against the interest, it is to be add accrued interest, which is to be received. What is the amount? Rupees 1,000. Okay. So this is the particular scene of trading P&L and balance sheet. Right. Now all the items have been posted, have been placed in the trading account, P&L account and balance sheet, right? Taking from the trial balance and the adjustment already given to you, which were to be placed, which were to be adjusted in the respective account. So already we have done this work, and after that now we have to make the calculations. So first of all, the trading account, right? So you have to take the total of this one. Okay, credit side, generally credit side is higher than the debit side, so we are uh, calculating this particular figure of credit side, assuming that the credit side total is higher, and this amount would be written over there, 90,000, right? Because this is the total, so we mark it. And we just take the total of this particular figure, use by using the formula in Excel, otherwise you can solve manually, right? This is the particular figure, and you have to subtract this figure out of 90,000 equal 90,000 minus 53500, and you find this figure. This is 36,500, so it would be called the gross profit. CD, and by gross profit brought down, that is rupees 36,500. Okay, and after that we have to calculate the net profit, so we have to take the total of this side. This is 38,100, and we take the total of debit side here by using this sum formula, and you find the total of debit side, that is 58,500. It is noteworthy that sometimes the debit total is higher than the credit total, so there would be a case of loss. The business is making a loss, so you have to take this total in place of 38,100, 58,500, and the figure of this credit side figure would be subtracted out of this figure, 58,500 minus 38,100, so there would be a loss of 20,400 by net loss 20,400, and this is the total 58500, 58500, right? We just remove this calculation. Okay, so this is the particular total. And that is the loss. By net loss, it is to be transferred to capital account. So by net loss, transfer to capital account, $20,400 less net loss 20,400. So 79,600 would be the calculated amount, but you have to write here this amount because you have to subtract from this the drawings amount, right? So drawing amount is 2,600. This is again the total or the amount after net loss, and drawing is 26. So we just calculate this amount equals 79,600 minus 2,600, and you find 77,000. Okay, now all the calculations are completed and we have to take the total of this side, the debit side, and this is the figure 2,01,400. And if we calculate or we take the sum of the total figures given in the liability side, if both the total are matched, so that time it is clear that there is no any arithmetical error, or you have properly prepared the final account. Okay, so we have to go for taking the total of it, and this is the figure that 2,24,000. So 1,000 is the particular mistake, and we should try to find the error where we left this 1,000, because this particular 1,000 figure is not matching with the debit and credit side of balance sheet. Okay, so there is no need to worry. You have to find out. Okay, so again, this is the lesson to learn that how to find out. Okay, so directly I can tell you that I deliberately left this particular figure of accrued interest of rupees 1,000, so that you just have the experience that how to match the balance sheet. So first of all, you should go through the trial balance items and you should match that every item is placed in a particular place as per the rule, and after that all the adjustments are properly managed or are properly placed in two places. As I told you that minimum two places would be there for adjusting any adjustment. So accrued interest is not written over there, so we have to mention this particular figure, right? So this is the particular figure. We just insert a line and write here that accrued interest rupees 1,000. So you have the total 2,02,400 in the debit side and credit side, both sides are matched. So your final account is prepared correctly, right? So you have to be very specific when you are preparing the final account, that every item or head of account is placed in a proper place, so that you match your you have your balance sheet matched, right? So this is the way how to prepare the trading and profit and loss account, okay, with the help of the trial balance. And I hope that if you make the practice of solving more practical or numericals, so you would be able to solve or to prepare the final account effectively, right? So in the next lecture we would be familiar with more adjustment, right? So this is the particular lesson for the day, that what is the need of the final account, why we are going to prepare the final account, what is the significance of final account, and why the stakeholders in the business organizations are seeking the information or seeking the final accounts to be prepared, right? Because they have to take the informed decisions, right? And further, there is the importance of final account to make the analysis in accounting, and we apply some tools for analyzing the information, right? So thank you for the day, and I think that you will make the practice of this particular exercise again. Thank you.